All right, welcome everyone. This is Bob Maurer. It is Friday the 8th of November, round about 3:45 my time. Want to do a review of the current seasonal futures spreads strategies, see how things are looking. And we've got quite a few to run through, so without further ado, I'll just get right into it. Dial into the portal, you'll see the most current PDF version for this upcoming week of November 10. And here we have it. And here we start. So top three rows, bear spreads 328, 329, 331 are all flat now. Top two, the lean hog and the cotton, timed out. We'll see how they ended. And then for wheat, we hit the revised target. So we'll look at that one. And then the bottom three are still ongoing here. 332, WTI light sweet crude. 333 is the Feb RBOB versus the May RBOB unleaded gas. 334, no fill yet in the feeder cattle bear spread. Then we got four on the second page here. 335, heating oil, waiting to get filled on that. 336, we are filled in the bear spread in corn. 337, natty gas, bear spread. And 338 right here, bull spread in cotton number 2. So let's hop on over to the charts. Take it one by one. All right, so here is the lean hog, number 328. I revised this a few days ago and turned out to be a good decision, it looks like so far, because I raised the first target to negative 30 and we got there 2 days ago after this little spike here, got down to negative 35. So I'd walked it forward starting a few days ago and we had raised the targets, and that looked like a good thing to do in hindsight here. I mean, maybe come next week this actually goes till the 13th, you might see this thing just crash on down, but nonetheless, for all intents and practical purposes, should be out. All right, so that one eventually did what it was supposed to do, and at negative 30, that would have been right about break even for the more aggressive average in traders, who got in at negative 57 and negative 5. So about break even, give or take. And then for the regular traders, that would have been a gain of about 25 cents or $100 a spread. All right, so that is strategy number 328, the bear spread in lean hogs. That one is going to go off our board. Level of realized gain for regular traders, about a break even for the more aggressive average in traders. Cotton is the next one here. And for some reason my computer is slow right now, so we'll wait a moment for this to load. All right. Strategy number 329, bear spread cotton, timed out yesterday. And I revised this about a week ago, and I dropped the stop down to negative 327, canceled entry level 2, and kept the targets where they were. So that all was that. And then yesterday it went out at settled at negative 373. So entry level 1 was the only one that was filled. That was negative 327. Closed at negative 373. So yesterday's range was anywhere from negative 352 down to negative 378. So about a 26-point range. So somewhere in there could have been filled and would have ended up with some level of realized gain. So this one's going to go off the board as a winner. Number 329, timed out yesterday. And then we have wheat. Number 331. So 11.5, I revised this, which was 3 days ago. We dropped the stop down to negative 3. And we had our target down here at negative 7.25, and that got filled today. So raised the targets and dropped the stop back on the 5th, and that target 1 got filled today. Now some of you might be sticking around to see if you can get to target 2, and that's trader's prerogative, but for intents and practical purposes for this, I'm going to say this one is going to go off as a winner. Now the benchmark was entry level 1. That's the only price that we were able to get in at on this particular strategy. I canceled entry level 2, and that was around -6.25 or better. Obviously you could have done negative better because we spent most of the time above -6.25. But to be fair and be conservative, it would have been about a penny gain, about $50 per contract if you got in at -6.25. And kudos to you if you waited a little more patiently and maybe sold up here towards the higher end of the range. So that's going to go off at some level of modest realized gain. It did what it was supposed to do. All right, so that is wheat. So now let's get into the ongoing ones. Okay, 332 bear spread in light sweet crude. Entry levels 36 and 47. I did see some fills come across at 36, so that's why I'm going to walk this forward as if we are filled. Had a double top there right at 36 and broke the last few days and ended up somewhere about, actually it's not settled yet, but trading currently right around 23. So currently sitting with some level of unrealized gain. There's basically going to be no change to the strategy. It certainly may pop back up, and that'd be fine. There's still a lot of time, and then look for it to rotate back down to the target. If it hits the target first, I'm probably going to just call this one, but we're going to stick with this for right now. It's in a range of anywhere from 20 to 36, about a 16-point range since the beginning of the window. All right. So again, filled at 36, so filled entry level 1, and currently sitting with some level of unrealized gain and no change to the strategy. All right. Then we're going to swap over to RBOB unleaded gas, another energy sector futures spread. Okay. Wow, this thing is really slow for some reason. All right, 333. This is the bear spread in RBOB unleaded gas. Our entry levels are -1917 and -1883. 3 days ago, it went through the -1917, so that level is filled. No fill yet for level 2 traders. And as you can see, the market over the last few days broke nicely. And currently, it hasn't settled yet. It's set at -2026. So roughly about a 100-point gain, roughly $400-ish, give or take. And all is going according to plan. So no changes to this one. Only level 1 filled, currently sitting with some level of unrealized gain. And hopefully it'll break this white line here, which is the 200 period moving average. It's done it before. It didn't spend too much time below it, but it has broken it before. So hopefully passed as predicate and it can get through it. If it just starts to hold it, then I would imagine a little bit of a bounce. But that's where we're at with this one right now. So far, all going according to plan. That is number 333 in the RBOB unleaded gas. Feeder cattle, next one. All right, so we're looking to get in only at one price level, 272, and no fill as of yet. We got up to, let's see, on Tuesday of this week, we got up to 260, so just 5 ticks away, and didn't get it, and it fell back just a bit. So consolidating in here for right now, staying above these moving averages, and we're just waiting for this thing to pop up a little bit more and then fail on down. So 212 is a benchmark. Oops, sorry about that. There we go. And we're just waiting for this thing to push on up, fall back down. So no fill, no change to the strategy. All right, then we have another energy sector contract, the heating oil spread. This one came close to getting us filled. Same day as the RBOB had a little push to the upside, which was Tuesday, so election day. And it got to, let's see, 347 we're trying to get in. It got to 332, so it got within 15 points of our entry level one, but no fill yet. So no change to the strategy. All is going good according to plan. Unfortunately, we're not on board. Broke pretty hard over the last few days. We'll see if it has one more leg to the upside. Hopefully, it can get us on board and then break on down, start reaching our targets. If it gets to the target first, then we might have to rethink it. But for right now, all going according to plan. Unfortunately, we're just not on board yet. So that is bear spread number 335 in heating oil, ULSD heating oil. And no change yet, or no change to the strategy at the moment, and no fill. And then we've got corn. So we had the WASDA report today. World Ag Supply Demand situation came out 11 a.m. Central. Comes out once a month. And that provided enough of a catalyst for this market to pop to the upside and allow us to get filled. And actually almost hit the stop. So we'll have to keep a close eye on this one. But here we go. So yesterday we got filled -3.5. And today pushed even higher through it based on, like I mentioned, that report. But a pretty good failure. So didn't really have legs to continue to move higher as of yet. And hopefully it stays that way. So we are filled, currently sitting right at break even. We only have this one entry level at -3.5. That's where the market went out today. Our stop is at -2. Targets are down here below. So that's that. So no change to the strategy. We are sitting with a fill, and we'll wait to see what happens next week. And yeah, no change. Okay, so then we got natty gas, bear spread. Number 337. All right, so our entry levels, this just started 2 days ago, and November 6th. So it was benchmarked at 224. That's our starting point. That's where it closed on that day. And our entry levels are 254 and 289. So we need this market to rally a bit and then break on down to our targets. Pretty nice downtrend, as you can see. So we're going with the trend. 254 is our first level, and then 289. So we just need a little help from the market, get a little bit of a bounce, like it's been a pattern, right? I mean, one bounce there, call it 2 bounces there, 3 bounces there, 4 bounces there. So it pretty much has had corrective rallies that have found new selling, which would work out perfect for us. So we are going with the trend on this one. Unfortunately, no fill as of yet, and no change to the strategy. And then last but not least, we have a bull spread. Now, we came out of that cotton spread, the D-Smith, and that was bearish. And now things have flipped to the bullish side. So this is the March-July bull spread in cotton, and number 338. So went out today at -251. That is the entry level. So you should have been looking for that one for those who wanted to get on board right on the close. Otherwise, you can wait till Monday morning, Sunday night, and get in then. Our entry level 2 is down here at -280. Stop level -318. And then we got our targets 1, 2, and 3 up top there. Kind of close, but nonetheless, you can figure out if you want to stick around to try to get the higher targets. We just needed a bit of a dip, but not new lows. Okay, we have enough room down here for new lows, but preferably a bit of a dip, challenge this low, hold, and then pop back to the upside. That'd be a good thing. So entry level 1, -251, right at today's close. Entry level 2 is -280. So if you were following this, you certainly could or should be filled because you're supposed to get in at the close today. So I'm going to walk it forward as if we're filled and basically break even, right, because we just started. All right, so that's 338. Should be filled on entry level 1 if you want to be aggressive and get in and think about averaging in, knowing that the risk per 2 lot is $6 and no change to the strategy at the moment. All right, tried to go through that as fast as I could. So 3 strategies came off the board. 2 that timed, 1 that timed out, 2 that timed out. All right, and the other one hit the target. And then we have the remaining, 7 strategies going. So plenty of action out there. Heavily loaded on the energy side with the heating oil, the RBOB, and the crude all going. But we are balanced out a bit with the corn contract, cotton, natty gas. So we do have some diversification, and the feeder cattle. All right. So I think that should bring everybody up to speed. If you have any questions, comments, anything of interest, feel free to let me know. Hope you have a great weekend set up for yourselves. I'm going to leave it there. And thanks so much for watching.